Well, joining us now is Sachin Shah, merger arbitrage strategist at Tullett Prebon, a London-based brokerage firm. And he told us previously that bidding would soon start for Yahoo. And what do you think, Sach? Good to see you, by the way, here on Street
Lisa,
Smart.
happy Monday.
Happy Monday. It's Merger Monday, so it seems, or at least it's Deal Speculation Monday.
Yes.
Why so much interest in Yahoo? And what about this Google news?
Yeah, I mean, I've been covering Yahoo situation since 2008, since Microsoft made its unsolicited offer. I actually think the valuation is much higher than where it's currently trading. As I mentioned just a little while ago, between $20 to $23, if not higher. But the premise here is that the market is so interested in this name primarily because of the failed deal with Microsoft, right? And they want to see some kind of resurrection of Yahoo and Yahoo shareholders that have been holding off owning the shares for, 3+ years.
$23. How do you come up with that number? Is that Yahoo as one piece?
Yes.
Or is that Yahoo broken off into components?
It's a component. So just to be clear here, just recently when Yahoo had their conference call, they basically said they believe the Alibaba stake to be worth $14 billion, Lisa. $14 billion. Yahoo Japan, market value right now, as Yahoo Japan shares are trading, Yahoo's interest in Yahoo Japan is approximately $6.7 or $7 billion. That's $21 billion right there, and that's where Yahoo is currently trading. Yahoo has approximately $3 billion in cash, so there's going to be some tax consequence because of the stake that if they sell in Alibaba as well as Yahoo Japan, and so that could negate the cash that they have on their balance sheet, a net cash position. So what does that mean? That means that the core operations, which is a search and display business, is essentially free. So if you assign a reasonable multiple, which it could be significantly higher, a 5x multiple, you're getting at the stock at $22 to $23, if not higher.
Sash, why isn't it just trading higher now then? Because you're not the first person to have said that this stock should be trading. I mean, certainly Microsoft thought that it was at least a $30 stock, right? A $33 stock.
Correct.
But over the last several months, people have said the stock should be worth more.
Yes, that is a fair point, Lisa. The primary reason why it's trading where it is a lack of transparency. What is Alibaba's stake worth? Who is going to buy it? What is the tax consequences? And who are the actual interested parties that are actually going to pony up the money? All of those, even though it's been discussed repeatedly, almost on a daily basis, as you know, Lisa, it's still not clear to the market. And that's the reason why the market is still, they've been through this several times, as I have been covering the situation. They're not sure if this is it. I believe this is it. This is, the silver lining here is that Jerry Yang and the board don't want to sell Yahoo for fire sale, but they want to sell the company at a reasonable valuation. Jack Ma, Alibaba, he says that he wants to acquire Yahoo. He has $20 billion check. You have Silver Lake. You have Canadian Pension Plan. Microsoft, they lack decisiveness. They need to make a decision here.
Sach, when you say this is it, you mean this is it, it's up for sale, it's going to be sold, but the question still remains to whom, and for whom does it make the most sense?
Yes, so my personal view is that if Alibaba, Jack Ma's Alibaba, took over the 40% stake, and it could be $14 billion, it could be obviously higher, that would be great. Microsoft basically doubling down and not having the search agreement that they currently have, actually having skin in the game, because at the end of the day, if you're going to compete against Google, you can't be not in the same room. You need the same people that exist in Yahoo and exist in Microsoft, where you have Bing and Yahoo in the same room, because Google is their personnel is in the same room, and they are forced to be reckoned with for obvious reasons. I would just like to point out here that Microsoft Steve Ballmer likes to talk a lot of stuff, but when they made that offer, February 1st, 2008, Lisa, their stock is actually down 16%, discounting the dividend that they paid to shareholders. Yahoo's down 13%. Google is up 6%. Apple is up 200%. So Microsoft could laugh and make fun of Yahoo shareholders. They can make fun of Yahoo and its intrinsic value. But at the end of the day, Who's eating their lunch? Google and Apple.
Right. People in glass houses, as we all know, should not throw stones.
Exactly.
We got to end it there. It's always good to have you. Get so excited. I know you do a lot of yoga.
I do.
You get
Thank
excited
you.
when we talk deals. Namaste. All right. Thanks so much, Sach. It's always great to have you on here, Street Smart. Sachin Shah of Tullett Prebon, talking about the latest Yahoo chatter, if you will.